Welcome back, everyone. Today we're diving into a hot topic that's back in the spotlight: reciprocal tariffs, and a provocative new term that's stirring debate: stock market colonialism.
Yeah, it's a phrase that sounds dramatic, but it's getting traction for a reason. With Trump back in office, his trade agenda is ramping up again. And it's not just about goods, it's about financial power.
Let's start with the basics. When we talk about reciprocal tariffs, what are we actually referring to?
It's essentially tit for tat. If another country hits US exports with a 20% tariff, the US hits back with an equivalent tariff. Sounds fair, but the global ripple effects? Not so fair.
And we're already seeing those ripples. Stock markets, especially in tech and export-heavy sectors, are swinging wildly. But this idea of stock market colonialism, what exactly does that mean?
Think of it like this. The US uses tariffs and trade access to push other economies into distress. Their stock markets fall, and that's when US investors swoop in to buy cheap, strategic assets. It's not colonialism with flags, it's with shares.
So the US is protecting itself with tariffs while also buying into vulnerable markets abroad.
Exactly. It creates an unbalanced game. Smaller economies face recession, their currencies drop, and their markets become bargain bins for US capital.
That's a heavy accusation. Isn't that just opportunistic investing, though? Buy low, sell high.
In theory, sure. But when policy is deliberately destabilizing those economies, it crosses a line. That's not market forces, it's manipulation, backed by the dollar's dominance.
And Trump's latest moves? Tariffs on Chinese goods, restrictions on semiconductors, pressure on EU car makers. They all seem to fit this playbook.
They do. It plays well politically in the short term, but long term, it's fragmenting supply chains and triggering global retaliation.
Yet the US stock market is still climbing. That's the irony. Domestic markets thrive while others stumble.
That's the imbalance. Investors are betting on America first to shield domestic monopolies while weakening global competitors. It's financial nationalism.
And emerging markets, how are they coping?
Poorly. Countries like Brazil, India, Indonesia, they're caught in the crossfire. Exports slow, capital flees, and their strategic industries become targets for acquisition.
Are they pushing back?
Some are trying. De-dollarization, forming regional trade blocs, investment screening laws. But their options are limited when they still rely heavily on US capital.
Let's talk from the investor angle. Is now a smart time to invest in these distressed markets?
Maybe, but it's ethically murky. Plus, the risks are rising. Nationalizations, capital controls, exit taxes. There's no such thing as a safe bet in geopolitics.
And China? They're still the main target. How are they responding?
With counter-tariffs and tighter market access? Sure. But more strategically, they're expanding their own economic influence in Africa, Latin America, Central Asia. They're creating alternatives to US dominance.
So, a new kind of Cold War?
Exactly. But instead of armies, we've got index funds. Instead of tanks, tariffs.
Do you think Trump's strategy is intentionally targeting rivals' economies?
Absolutely. If the US can't outproduce China, it'll try to outmaneuver them economically, make Chinese firms more expensive to operate, less attractive to invest in.
But that's a double-edged sword. US companies still rely on global supply chains, right?
They do. But Trump's banking on reshoring, pushing domestic production in sectors like defense, energy, and AI. Protectionism creates winners, but it also creates price hikes.
Speaking of which, consumers, are they starting to feel the impact?
Already are. Electronics, cars, even groceries, it's all getting pricier. Remember, tariffs are just taxes by another name.
So what's the big picture here? Is this about bringing jobs home or controlling the global financial game?
Honestly, both. It's sold as economic nationalism, but behind the scenes, it's about expanding US financial control. If you own the industries through stock, you shape the future.
Looking ahead, what should we expect in the rest of 2025?
More volatility, US growth in protected sectors, continued capital outflow from emerging markets, and probably more pushback from China and the EU.
For investors, defensive or aggressive stance.
Cautiously opportunistic. Look for stability, but don't ignore the political winds. High returns might come with high ethical costs.
And for everyday citizens?
Pay attention to the narrative. Rising prices, rising nationalism, and the growing sense of us versus them. These are signs that power is shifting, and not always in visible ways.
A financial realignment, indeed. Less about trade, more about control.
Exactly. And if the trend continues, we might wake up one day and find global economic sovereignty traded away, quietly, through markets, not missiles.
That's all for today. Thanks for breaking it down with such clarity.
Anytime. Let's keep an eye on the money and the message behind it.